Hi there, welcome to Kneppy Invest. Is there any better feeling in the world as an investor when a company you own releases financial results that surprises not only yourself, but more importantly, completely surprises the market? Because when a company does that, you'll see the share price rally significantly. And this definitely happened to Playside Studios when this company released their Appendix 4C for the December quarter. Upon the release of their results, share price rallied about 22% on January the 31st. And then the next day, February the 1st, share price has rallied another 7 or 8% when the overall market was down 1%. Now, maybe I'm being a little bit biased because I do own this company and I have held Playside Studios for a few years just because of the potential. But what excites me more about Playside Studios, apart from their really good financial results that they released for the quarter, and I do have to temper my expectations moving forward for this company a little bit. But the thing that really makes me feel really good about this company is the lack of exposure this company has right now in the investing community in Australia. I think this company is flying under the radar. And I think it's significantly flying under the radar. There is no chatter about this company at all. I don't hear this company mentioned at all in any of those podcasts, those programs, investing programs I listen to. Very few articles written about this company. In fact, Osby's a call. I have not heard this company mentioned once over the last probably year or even 2 years. The other thing I did today was I went to Hot Copper just to see how much interest this particular Appendix 4C, which was an absolutely stellar result from the company, how much interest that drew in that particular community. There was only 12 posts. That is a really low amount of posts when a company releases such an amazing Appendix 4C. So even in that community, Hot Copper, this company is flying and significantly flying under the radar. And that fills me with excitement, to be frank with you. Excitement. Because I've seen this happen time and time again. When a company is flying under the radar, like Playside Studios is doing right now, and you see the valuation of that company absolutely explode over the following 3 or 4 years. This happened to Neuron Pharmaceuticals. I bought that company in December 2021. The share price rallied about 100% in one day. But still, even after that particular day, which was, in my opinion, the company making news for Neuron Pharmaceuticals, there was no chatter about that company for the next 1.5 years. And now there is so much talk about Neuron Pharmaceuticals. I hear Neuron Pharmaceuticals mentioned everywhere. In fact, if you go to Hot Copper, just look at the amount of posts written about Neuron or in regards to Neuron Pharmaceuticals on that particular platform. So maybe I'm going a little bit off topic right here, just talking about Playside Studios, but there's a lot of things to like about this company right now, and that is one thing. But in saying that, generally and overall, the market is aware about the potential of this company. That's why the market of Playside Studios is over $300 million. So even though most participants on the ASX, most retail investors don't know anything about this company, there are some people out there, some fund managers who are aware of this company, but I think they're keeping quiet about the potential of this company moving forward because Playside Studios is a really exciting story right now on the ASX. So before we have a look at the Appendix 4C, which absolutely surprised me, let's have a look at a few other facts in regards to this company. Before we have a look at Playside Studios Appendix 4C for the quarter, let's have a look at what this company does. So Playside Studios develop video games for mobile, PC, virtual reality, and mixed reality. The company publishes its own games based on original IP, for example, Dumb Ways to Die, stuff like that. I've never played that. More than likely, we'll never play that game. They also have a work for hire division. I'm pretty sure they have relationships or have developed games or are in collaboration with Activision Blizzard, Meta Platforms, Netflix Games, and Take-Two Interactive. They also have a publishing arm which provides funding, development support, marketing, and publishing of third-party games for smaller independent studios. This company was founded in 2011 by a few dudes, and one of those dudes is a CEO. Pretty sure the other two dudes are the non-executive directors. I won't try to pronounce their names. I'll talk about them in a second. So founded in 2011, listed on the ASX on the 17th of December 2020. And that was a popular time for companies to list on the ASX. I think something like 220 companies listed on the ASX in 2021. And if you include the last few months of 2020, it's probably about 300 companies listed during that period. Now, the CEO, co-founder, and the two non-executive directors, which I'm pretty sure also the co-founders, combined own 60% of this company. That's a very definition of skin in the game. That's another reason I actually do like this company, because the success of this company is really important to those three gentlemen. Not only are they co-founders, they founded this company, so they want this company to succeed. They have a lot of their wealth in this company right now. Now, the markup of this company, not June the 22nd, I don't know why I've had that. That's January the 24th, is 318 million. That's at a share price of 78 cents. And the T code for this company is PLY. I think I had June 22nd there is because that's the last time I did a video on this company. So about 18 months ago. Now let's have a look at Playside Studios December quarter results for financial year 24. Before I talk about these results, I should just mention that typically when I open up any companies that I own, their results for the quarter, half year, or full year, I have already developed some expectations. And typically my expectations are in a range. And sometimes, and this actually happens quite rarely, but sometimes the company's results blow out my expectations. And this definitely happened for Playside Studios. I did not expect these sort of numbers when I opened up their results. So receipts of customers, $23 million for the quarter, and the company was operating cash flow positive by 11.2 million. But the thing that was more of a pleasant surprise is how much scale and operating leverage this company showed in this particular quarter. Because if we compare it to the last December quarter, 1 year ago, we did see that operating leverage. For instance, receipts up 16.2 million and the operating cash flow up 15 million. So most of that increase in cash receipts fell to the bottom line in operating cash flow. And the way they did that is they didn't increase their spending all that much. And that is really important. For instance, staff costs up 3.6 million. And in fact, if you ask me, what's the one cost I'd like to see increase for the company? I might say staff costs, or maybe advertising and marketing. Wouldn't mind seeing that increase. But they actually did decrease advertising and marketing down 1.8 million and administration costs down 1.4 million. So overall, if you look at those three areas of spending, they were flat in the past year. One other thing they did increase their spending on was intellectual property, which is capitalized research and development up to 3.7 million. But overall, operating cash flow positive 11.2 million, free cash flow positive by about $7 million or so. And if you look at the increase in cash on hand, it went from 31.7 million to 38.3 million. So a brilliant quarter from the company. But the big question moving forward, and the reason I want to temper my expectations moving for this company, is some of their own expectations, which I'll talk about in a second. And also, we have seen this happen before with Playside Studios. When they have a really good quarter, the next few quarters actually do disappoint on the lower side. So we'll talk about that when we look at the cash receipts history of this company. And here is the receipts history for Playside Studios. The first thing I always look at when I'm looking at or viewing the receipts or revenue history for a company is I want to see revenue or receipts growing through time. I don't care if there's any lumpiness there, which you see with Playside Studios. I want to see receipts growing. In fact, if I don't see receipts or revenue growing through time, I almost immediately ignore doing any further research on that company. I won't say that company is uninvestable, but I will say that it is more than likely that company is uninvestable. In fact, I say it's much, much higher probability that that company is uninvestable. If a company can't grow their revenue through time, then how is that company going to grow in the future? And it's all about growth. I don't care about dividends. I want capital growth. And the first way you get capital growth, in fact, the best way you get capital growth is to increase your receipts or revenue through time. So Playside Studios definitely shows that signal. Receipts have grown from about $3 to $2 million when they first listed on the ASX up to $23 million in a quarter. So receipts have grown tenfold over the past few years, in fact, 3 years. Now, you do notice a bit of lumpiness here. And in fact, if we go back to the March quarter 2022, you saw a significant increase in receipts from 5.5 million to 14.8 million. That might have caused a little bit of excitement in the market. Can't quite remember. But then receipts went straight back down to 5.4 million. But if you notice, the time period between that particular quarter, the March quarter, with $14.8 million receipts, to this particular quarter, where they recorded $23 million of receipts, you'll notice that receipts were growing quite consistently from quarter to quarter. So I just want to temper my expectations for Playside Studios over the next few quarters. I don't expect this sort of these sort of financial results in the next 2 quarters. In fact, my expectations in terms of receipts for Playside Studios in the next quarter is for it to be between 12 and $16 million. Now, another thing and another reason why the market loved these sort of results is because not only were these really good results, but the company also upgraded their revenue guidance. I think they might have also upgraded their EBITDA guidance as well. So they now expect financial year 24 revenue to be between 60 and 65 million. The previous guidance was revenue to be between 55 and 60 million. And the reason that has increased is because of their work for hire pipeline. So that implies a growth of 63% on previous corresponding period and a split of 58 to 42, half on half revenue split. So 58% of the revenue in the first half, 42% of the revenue in the second half. Now, because they are expecting revenue to be lower in the second half, that also means EBITDA is going to be skewed more towards the first half of the year than the second half. In fact, they're going to be roughly break even in terms of EBITDA in the second half. So that means financial year 24 EBITDA is expected to be in the range of $11 to $13 million. Now let's have a look at the chart for Playside Studios. And to be honest with you, as soon as I looked at this chart, I went classic breakout. This is a beautiful breakout happening before our eyes. In fact, I'm half tempted to trade Playside Studios, even though I own this company in my small cap portfolio, because this is the classic breakout I'm always looking for. Now, there's 3 reasons why this is a classic breakout that can be really successful, and you'll see possibly a significant re-rating in Playside Studios valuation over the next few months. The first reason is because the share price is now at a multi-year high. Now, typically I look for a share price to be at least a 6-month high, preferably over a 1-year high. But right now, at a share price of 78 cents, Playside Studios is at an 18-month high. Last time the share price was this high was back in August 2022. But more importantly, the reason why the share price is increasing is because it coincides on the release of positive financial news and also a profit and revenue upgrade from the company. So the company has just released 2 powerful positive announcements to the market. That's why the market is excited. And even more importantly is a massive increase in volume we have seen in the last 2 trading days, coinciding with that positive announcement released by the company. Massive volume coming in. 2 days volume coming in, and that's why this is a classic breakout. So again, massive volume coinciding with a positive announcement from the company. In fact, the most positive announcement a company can release, and the share price at an 18-month high. Probably should call this video Playside Studios breaking out. In fact, I might do that. So even though the whole catalyst for me doing this video was their positive, really good December quarter results, operating cash flow positive by $11 million. As soon as I looked at the chart, I went, this is a classic breakout. A beautiful potential trade happening before our eyes. If you have any thoughts about this company, if you think this is a dog stock and an awful company, I'd love to hear your opinion. I'm always willing to take aboard any opinions that are completely different than my own. And if you have well-developed reasons or arguments, I will listen to those. Doesn't mean I'll change my mind, but I'll definitely listen to them. You have to remain open-minded as an investor. In fact, you should be open-minded as a human being. There's too many closed-mindedness going on right now out in the real world. Anyway, getting a little bit off topic, but if you have any thoughts about this company, leave those in the comment section of this video. Otherwise, I am not a financial advisor. If you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.